Hey, what's up, y'all? Welcome back to It's Up From Here. I actually have Eldridge partner with me, and her name is Anitra over at Vertical Capital too as well, y'all. And we're gonna be asking her a few questions, trying to get some insight on exactly what Vertical Capital does. So how you doing today, Anitra?
I'm doing good. Thanks for inviting me, David.
Oh man, you're welcome, man. Can you please explain to them exactly what your role is in Vertical Capital?
So I wear many hats, actually. I'm an underwriter as well.
Okay.
A little bit of everything: marketing, raising capital, underwriter, everything.
Okay, that's beautiful. So how do you guys mitigate the risk involved in private lending? And how do you guys figure out who your borrowers are gonna be?
That's an excellent question, David. So how we mitigate our risk is a number of different things, right? We have title insurance. So this is more for on our capital partner side, right? And to protect our money as well. We may do we have title insurance, what we call the lender's policy.
Okay.
We, in certain situations on a new construction, we may ask for a no-work affidavit. And what a no-work affidavit is, it keeps us in first lien position, even if a contractor or someone tries to put a lien against the property. We do ask the borrower to carry 3 types of insurance, right? We want the general liability, we want the hazard or the risk for the property. We also want flood insurance. We also dig a little back, just a little bit, not a lot, into the contractor's background, right? We want that contractor to carry insurance as well, right?
Okay.
We want that contractor to be licensed. Now, that's not in every case.
Okay.
Right. If it's a light rehab, we may not even require any of those things for the contractor. It just depends on the property. How we determine who the perfect borrower is, again, we are still evaluating that process, right? We're always fine-tuning that process.
Right.
I don't think there's really such thing as a perfect borrower.
Right.
But there is one that can be well qualified, right? Because because our decision making is predominantly based on the asset, we just look for in a borrower to have good communication with us. That's a pet peeve of ours.
Okay.
You don't have to have a ton of experience because our goal is to be here for the beginner, right?
Right.
We want to be at the intermediate level, the beginning level. We want to see an inspiring investor get their first start. So, we always want to be able to not so much hold their hand, but if you need us to help you out, we definitely want to do that.
Okay.
I look also when you fill out the application, if your application is incomplete, those are usually red flags to me, right?
Right.
Because we don't require a lot, right, for you to be qualified for a loan for us, right? So the ability to pay attention to detail, your understanding of your numbers, right? If you're telling me that it's gonna cost you $100,000 to renovate a fully gutted property, 2,600 square feet.
Then you got some questions.
I got some questions. I'm curious as to how you're gonna get it done.
Right.
And then also your ask, how long, that's using that same example, how long do you expect that it's going to take you to get it renovated and put it out to the market, right?
Right.
Or even refinance. So when I say put it out to the market, I'm going to use it interchangeably. Either you're going to refinance us out or you're going to list it, right? So if you tell me on that same 2,600 fully gutted property that's been sitting here since Hurricane Katrina, that needs every trade possible and every permit known to man, and you're telling me you're going to be able to get this done with $100,000 in 6 months, that's a red flag.
Right.
Now, do we just outright deny people like that? No, 9 times out of 10, I'm going to pick up the phone and I'm like, hey, David, look, I had a chance to take a look at your application. I'm going to ask you for questions about your application regarding those numbers.
Right.
And if you're adamant that you're 100% sure that, oh yeah, my uncle gonna get in here and he gonna do this and do that, that's how I'm gonna get it done for $100,000. Wrong answer.
Right. And I definitely understand that. First of all, it's a great thing that y'all are giving people those type of opportunities. It's not many companies that do. They do like a full background check. They want to know a whole bunch of things, right? They want to kind of, it's just a list of things that's in place. So I hope y'all are actually paying attention to that too as well, because Vertical Capital is a company that can give you your first investment opportunity.
Absolutely.
What advice would you give to real estate investors looking to secure their private financing?
Ooh, wow, that's a good question. I think the advice to secure private financing is to find a deal. Listen, if you have a deal, there's no shortage of money out here. Whether you consider yourself a well bank qualified borrower or if you got a 620 credit score, like there's no shortage of money. But when you find that deal, you got to believe in that deal.
Right.
Right?
Right.
So you need to sell me on the deal. I'm gonna do my due diligence, of course, but you need to find a deal, right? Don't approach us or any lender and the numbers are just out of sync, right? And you're telling me you're buying a property at what we call retail value, and you still have to add money
More to it.
Yeah, you
right.
still have to add more to it. So where's the equity spread?
Right.
For you to make money and for me to make money.
I think that's kind of becoming a big issue nowadays too. And the other day I did a small video about that, because I think what's happening to the world today is the sellers are a little bit confused, just as the buyers, right? The sellers are not being as realistic as they're supposed to be, because they were kind of stuck on the 2%, 3% interest rates that was out for the COVID moment. And that kind of took over the realm of people pricing and valuing their homes.
Yeah, listen, look, I read an article last week in the Scotsman's Guide, right? And in the article, I think in July and June, the days on market across the country increased, and sellers did not decrease their price.
Right.
So I can agree with you on that. I'm actually one of those sellers. Like, yeah, the sellers right now across the country are not budging off their prices. And in fact, I want to say in some instances, they've actually increased their prices from what same time last year than what they would have sold that same property for. But if you're an investor, listen, there are deals out there. You just have to be patient.
Right.
For my first deal, it took me a year and a half of searching before I was able to find, the quote unquote perfect property. So you have to have patience, especially in this market. But there are sellers out there. There are deals out there. And you just got to put your head to the ground.
Right,
and find it.
right, and that's true, man. Are the specific markets trending right now, or opportunities with real estate investors on the verge of beware of the private lending? Meaning, like, as far as people, as far as investors wanting to get private lending, are they a little bit kind of on the edge about it, or you think it's kind of moving towards being better, and you're getting more and more people want to go to private lending?
I think right now, market conditions are pushing people to seek private capital, right?
Right.
And we like to use private and hard money, those terms interchangeably, right? I think in the long term, or in the past, hard money, aka private money, has gotten a bad rep, right?
Right.
But it's a source, and it should be looked at as a source.
Right.
And it should be, listen, I'm always going to be a proponent of what we call capital stacking.
Right.
So vertical capital should be a source. Someone else should be a source. Gulf Coast Bank should be a source.
Right.
And each deal is going to cause for a different type of lender. So if you need speed, private money, hard money is the way to go.
Right.
Right? If you have a deal and you need to get it done like in 2 weeks or less than 30 days, that's the way to go. But if you have a situation where, hey, the seller can wait for 45 days, 60 days, and you are a qualified borrower, by all means, go that route.
I mean, I think private lending is actually one of the greater things.
Right.
I mean, for me, I think people are just more afraid of the interest. But nowadays, the interest rates are high all the way around the board.
Good point. Interest rates, and I was going to get to that. When we look at the interest rate, it is competitive. So if you have larger institution, or what we call institutional capital, vertical capital doesn't have institutional capital. I'm not backed by a bank. I'm not backed by Wall Street. But you have those other quote unquote hard money lenders such as Rock Capital, iFund Cities. All those are the larger ones, right?
Right.
Finance of America. They are backed by Wall Street, which their capital is affected by the Federal Reserves.
Okay.
Right? Jerome Powell just said that they may increase at the end of this month to 5.6%. So right now, these guys are already charging 12.5%.
Right.
So when it increases to 5.6% on October 30th, November 1st, now they're going to be at the 13%, which that's where we're at.
Right.
So what's going to happen is, and what is happening is, they're meeting us where we're at. So now you have to determine, do you want to go with those guys, because they still are going 45 to 60 days to close out, or do you want to go with a company like Vertical Capital that understands you locally,
Yeah.
has that personable
Relationship.
touch, the relationship, and we're not going to leave you hanging. Because
Right.
in the last market cycle or the last market crash, some of those institutions left those guys hanging, right? You got money invested in a project, and now you don't know where you're getting your next draw from.
Right.
That's not us. And we're not going to change our rates because they're changing theirs, but they will do it to you.
Right. And I think that's a wonderful thing. I mean, the interest rates are kind of crazy.
Correct.
They're getting crazier, and especially out here in Louisiana with the insurance rates
Oh, yes.
too as well. So people are a little bit kind of skeptical.
Yeah, borrowers are a little bit skittish.
Right.
I can see and understand that, but I have a saying that I always say on our YouTube page is, you got to break the huddle.
Yeah.
Right. If you want to get in the game, you got to break it.
Right. You gotta play.
You got to
You
play.
just gotta play. I actually just told somebody that yesterday. They were like, "Man, I'm kind of scared of investing right now." I said, "Listen, you just gotta get in the game.
You just got to get in the game.
Invest. I mean, it's nothing wrong with investing. You just gotta
Right.
find the right deal, invest, and know where to put your money and how to spend your money.
Exactly.
You know, so to me, that's the biggest part. Are there any common misconceptions, myths about private lending that you would like to debunk?
Ooh, that's a loaded question. I would say the misconception, I think I maybe touched on it a little bit earlier. The misconception can be that we are, like the whole thing about the money is too high to where you can't make the spread,
Right.
right? And that's not true, right? It is high, but you
You can still make some money.
You still can make the money, right? And that goes back to what we talked about earlier. If you can evaluate a property and you can make your evaluations adjust to the market, there's always a spread, right? We no longer do the 70% rule. That's out the door,
Right.
That's out the door because now we are adjusting to the inflation. We are adjusting to interest rates. Insurance rates and things of that nature, right? So you, as a borrower or a buyer, you need to adjust your evaluation,
Right.
right? So right now, I would say if you're in Louisiana, that 70% rule is completely out the door. That walked out the door in June or July of this year, right? So you need to be at 65%. And even when you make that offer, I still would fudge it a little bit. Now the argument is, hey, I'm gonna lose some deals. So what? There's over 300,000 parcels in New Orleans, and you don't think you can find one
deal out of all of them.
One deal?
Right.
Right.
Right. I mean, that definitely makes a lot of sense. People just, I think what has to happen is investors have to learn the percentile, when it comes to actually making the money.
Exactly.
Because the problem is, and this is just my opinion, the problem is they're looking to make $100,000 overnight.
Exactly. Yeah. You're not trying to make $100,000 on one deal.
Right, and that's what I think the problem comes in at because they thinking
agree,
that
David,
that's
that
how
is
real
true.
estate really works, and a lot of them get the misconception from a lot of other videos that they've may have watched in the past, right? I talk to some other investors, and I mean, some people get lucky, and some people do make that type of money, but everybody don't, right? You gotta use the rule of thumb. Like, as long as you evaluate your deal properly, you make at least 25 to 30%. You good.
You're good. Right. Right.
You know.
I can agree with you that making that grand slam every time, those are just outliers.
Right.
And you don't get outliers throughout your career as often as you've been sold on some guru's channel or video.
Right. And so what are the factors should real estate investors consider when choosing between fixed rates and variable rates, loans for the projections?
So we don't have those with vertical capital, right? We're bridge funding, right? Again, as a seasoned investor, I would say when you're going to get traditional financing, the variable rate is not, in my opinion, is not good, right?
Right.
Especially if you're holding that property for rent, right? And what that does is it makes your income unpredictable.
Okay.
Right. So your rent is set, right? You're only going to get $1,500 for this 3-bedroom, 2-bath. Right.
Right.
But if your interest rate is constantly adjusting, how can you predict your monthly income? You don't. You can't, right? That mortgage payment may be $600 this month, right? And then next month it's $700-800.
Right.
That just ate into your profit.
Right.
Right. And so that's how you get yourself entangled in situations in the long term. A good borrower or someone who's using other people's money in this instance, you always want to go with the fixed term. And in my opinion, you always want to go with the longest term. Right. If you at the, if they're offering you a 15-year, I would probably take a 30-year.
Right.
Because now I'm in control of those payments.
Right.
So you as the borrower, you always want to position yourself against the bank to where you have more control to manage your monthly expenses and to also have that predictable income.
Right. Yeah, that's definitely some good advice. Y'all, my last question for my girl Anitra: how can investors get in touch with y'all company?
You can get in touch with us. We have a website. It's www.verticalcapitalus.com. You can reach us on Instagram. I believe it's Vertical Capital or @Vertical Capital on Instagram. Listen, y'all, I'm trying to learn this social media stuff, to be honest with you. We also have a YouTube channel. You can tune in to Vertical Capital on YouTube. But I'm sure we'll add some links inside the description.
Most definitely. We're going to definitely have some links inside of the description, y'all. I want to thank you for coming today, Anitra.